Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Migao Group Holdings Limited interim report. Migao Group Holdings Limited offers a diverse range of businesses and services, including sourcing and trading of specialty potash-based fertilizers, manufacturing and processing of potassium chloride, potassium sulfate, hydrochloric acid, and compound fertilizers, reselling of potassium nitrate, warehousing services, research and development, related services, technical and project management services. These products and services cater to the needs of agricultural reclamation and agribusiness companies in China. The significant increase in Migao Group's stock price over the past year can be attributed to several key events. The company's successful listing on the Hong Kong Stock Exchange in March 2024 marked a major milestone, with its stock opening 7% higher on its trading debut. Following this, the lifting of cornerstone investor bans in September 2024 led to a surge in the stock price, reaching a record high of $52.52 per share. The company's positive interim results announced in November 2025 further boosted investor confidence, with a year-on-year increase in profit and revenue. While the specific increase in profit was slightly below 19.37%, the overall financial performance contributed to the sustained upward trajectory of the stock price within the past year. These events collectively resulted in an impressive stock price increase exceeding 19.37% over the last year, solidifying Migao Group's position as a promising investment opportunity. The primary drivers of revenue growth for a company are multifaceted, with several key factors contributing to an increase in overall revenue. The most significant driver is the rise in average selling prices of products, accounting for 92.3% of revenue. Additionally, partial increases in sales volume of certain products, such as compound fertilizer, have also contributed to growth. Other notable drivers include higher market prices of products and production services, as well as the sale of specialty potash-based fertilizers, potassium chloride (KCl), and potassium sulfate (SOP). These factors collectively resulted in a total revenue growth of 10.5%. However, there are also primary drivers of revenue decline, primarily driven by decreases in sales volume of certain products. Specifically, KCl saw an 18.4% decrease, while SOP experienced an 88% drop. Additionally, the total sales volume of the company's products and production services declined by 15%. These factors highlight the importance of managing product sales and pricing strategies to mitigate revenue decline. The net income of the company decreased, despite a slight fluctuation in numbers, indicating a decline overall. Conversely, profit margins increased significantly, rising by 1.2 percentage points from 8.7% to 9.9%. This suggests that while the company's revenue may have been impacted, its ability to retain earnings has improved. The company's financial performance indicates a strong ability to generate cash from its operations. The operating cash flow has been consistently positive, with notable amounts recorded on multiple pages of the financial summary. Specifically, the company reported a positive operating cash flow of $162,470, page 20, an increase in cash and cash equivalents of RMB 35,532, page 36, and an operating cash inflow of RMB 1,234,119, page 31. These figures collectively demonstrate that the company is generating sufficient cash from its operations to support its business activities. The company's debt level and interest expenses have shown some changes over the past year. Debt level. The company's borrowings have increased significantly, with a rise of approximately RMB 139,281 from 2024 to 2025. This increase is evident in both the page 36 and page 54 summaries. However, on page 12, it is mentioned that the debt level has remained stable at RMB 605.9 million as of September 30, 2025. Interest expenses. The interest expenses on borrowings have also increased, with a rise of approximately RMB 121,000 from 2024 to 2025. This increase is evident in page 42. However, the page 54 summary mentions that the company carries interest at fixed market rates ranging from 3% to 3.5%, but no significant change is mentioned. Overall, while there are some fluctuations in debt level and interest expenses, the changes are not drastic, indicating a relatively stable financial situation for the company. Management is optimistic about the company's future prospects, driven by a growth strategy that combines innovation with expansion into new markets. Key initiatives include expanding product offerings to drive growth, exploring new markets in Asia, Middle East, and Europe, enhancing production capacity and operational efficiency, investing in new facilities and technologies. To bolster leadership position, these strategic moves aim to capitalize on growing demand for high-efficiency fertilizers and solidify the company's market position. The company has a history of paying dividends to its shareholders. In 2024, a final dividend was declared at RMB 0.061 per share, and in 2025, a total of RMB 68,171,000 was paid out for the 6 months ended September 30, 2024. This indicates that the company has prioritized returning value to its shareholders through dividend payments. That concludes the financial summary for Migao Group Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.